If you're one of the many business owners who are working their butt off and they're grinding it every single day, but yet they still don't have a clue as to what's going on with the finances of their business, then this episode is for you. Hey, badass business owners, my name is Tammy, and I'm here to help you grow your business, but more importantly, grow those profits. Now, what you're probably wondering is, what is she even talking about? But those of you that it resonated with in the beginning know exactly what I'm talking about. You see, a lot of business owners reach out to me and they've built these great businesses. They could be in business for a year. They could be in business for 10 years. It doesn't really matter. But they've been working really hard and they just know that, hey, I'm working these long, crazy hours, 5 days a week, 6 days a week, sometimes 7 days a week. But yet they are honest with themselves and they realize, I don't have the first clue with what's going on. At the end of the year, when they go to pay their taxes, they probably just give their bank statements to the CPA, who then does some little magic and says, okay, this is what you owe in taxes. And they pay it not willingly. They get ticked off that they have to pay, $4,000, $5,000, $7,000, whatever it is. And they just don't understand the why behind those numbers. They don't understand, why do I owe so much in taxes when I personally do not feel like I made that much money? And that's where it gets really confusing for a lot of people. And I want to kind of take a pause and remind everybody that one of the best things that you can do in your business is to understand your business numbers. Now that sounds all good and dandy, right? Yes, I should know my business numbers. Beat me up a little bit more. Doesn't necessarily going to change what I do day to day. I need to understand the why. Why is it important? Because let's face it, for many people, diving into some numbers just is not going to get them excited. And unless it's something that's going to put more money in my pocket, I don't understand why I need to do it. It's been working. I've gotten this far, but it's not working. And yeah, you have gotten that far. You might be making way more money than you think you're making, hence why you have to pay the government so much in taxes. But at the same time, owing the government taxes isn't necessarily a bad thing if you're making good money, because the more money we make, obviously the more taxes we have to do. But the problem is there's a disconnect there, and people don't equate being successful, quote unquote, and owing all of this money because they don't understand their business numbers. They don't know how much money came in. And if you want to find out if you're in this group, because some of you will go, oh yeah, I know my business numbers. But the reality is you really don't. And we're going to do a quick little test on that. If I was to ask you how much money you made yesterday in your business, there's going to be a number that pops into your head. Then I'm going to ask you, think about the past week. How much money have you made? How about the last month? Now, for many of you, you are taking guesses. Some of you might have stopped and said, well, I had this job and this job and this job, and that's what I did yesterday. That's an easy one to do. But when I said week, now you're getting a little bit more into guessing. And when I say month, you're guessing even more. And if I was to say what you did the month before or last year, what did you do in sales? Some of you are going to know that number, but many of you are going to take guesses. And my favorite thing to do is to have people take these guesses or tell me their numbers and then compare it to what we know to be true. And what's interesting is when I say numbers, different things pop in. Most people are going to think sales. They're going to go, well, this is what I did in sales. Well, sales isn't what you put in the bank. Okay. Profit is what goes in the bank. Sales goes through your bank account, but it turns around and goes out really fast. So when I'm thinking about knowing your business numbers, it's more than just knowing your sales, because you've heard people say, yeah, I did $500,000. I did $1 million. That's great. That's a vanity number. That's something you can brag about. But there are people out there doing $500,000 or $1 million in sales, and they're losing money. There's a reason why Sears, Kmart, a lot of those Blockbuster, a lot of those businesses that we all knew as kids, some of you are a lot younger, so you probably have more recent ones, but there's a reason why a lot of these big businesses went out, even though it was confusing, because they had this big store that was still there and it was always busy. Once again, because we confuse sales with profits. A lot of big companies that had been around for, like Sears alone, I think was 100 years old before it went out. But some of these businesses have been in business for a really long time. But ultimately, the reason they close is because they don't have profit. Matter of fact, you've probably heard the statistic. Half businesses are closed within 5 years. 90% are closed before 10 years. It's not just sales. The reason they close is cash flow. They're not profitable. They're not making money. Most businesses fail because of lack of money. The business that I had, I can run it as great as I can, but at the end of the day, because there really was no profits to keep it sustained to continue on, it was silly for me to keep that business open, right? Because it didn't matter how great I did everything. If you don't have enough customers coming through the door, this was a brick and mortar, but if you don't have enough customers coming through the door and there doesn't seem to be any change in that anytime soon, you just have to say, am I willing to throw away money? Right? It wasn't from a lack of sales. There were sales, but at the end of the day, it comes down to the costs. And some of those costs in your business you can control, and some of those costs you can't control. Once again, it's everything that happens between sales and profit that will help determine how profitable you are. So when we're talking about knowing your business numbers, you kind of need to start with, do I know my sales in the first place? Then, do I know where all the money's going in the middle? And finally, how much profit do I have? So you'll hear me say all the time, sales minus cost of goods minus expenses equals profit. Why? Because that is the flow of money through your business. And here's the really cool part. When you start learning your business numbers, it also is how your profit and loss statement flows when you're reading it. It's going to start with all the income you've got coming in. Then it's going to tell you what cost of goods you've had. Then it's going to tell you all the operational expenses of the business. And you're going to land on the net income, which is the profit the business made before doing its three jobs, which are taxes, retained earnings, money you're going to have to pay off debt with and stuff like that. And then finally, what you get to take as a business owner. So if you kind of understand that flow of money through your business, and we talk about that a lot here on this podcast and YouTube channel, then you can start really getting a better understanding for your business. Because sometimes, for example, if someone owes $7,000 in taxes, there's a good chance that they had a profitability of anywhere from $40,000 to $60,000, depending upon their personal situation, because taxes are more than just the business, right? Because you take the profits of your business and usually that flows into your personal situation. But in most cases, then when you talk to somebody and you're like, well, yeah, you kind of made $40,000, $50,000 in your business, you're going to pay, $7,000. And they're like, there's no way I made $50,000, and in their mind, they really feel like they didn't. They didn't, the business did. What they got to take was after these taxes, after their retained earnings, after they paid their debt, and after they have cut their business profits so much through owner's draws. And people don't take just a $3,000. They take $100 here, $300 here, $200 here. And next thing you know, they think they don't have any profit because there's no money at the end of the day. No, because you spent it along the way. Especially those of you that are horrible at mixing business and personal. I can't tell you how many times when I take over someone's books and we're cleaning it up and I'm asking them questions that I know exactly what they're for, the odds are you're not taking your customers, especially if you're a landscaper, for example, you're not taking your customers to the movies, nor are you buying them expensive gifts for your wife or your husband. And there are people that are spending money at all these locations. And you obviously don't know the rules of when it comes to meals and stuff, because people are going to lunch every single day on the company thinking, oh, there's plenty of money on there. And it's, and food is not cheap nowadays when you go out, right? It used to be, it could be $5-6, but I'm seeing them where one person, it's $15, $20 here every single day going to, In-N-Out Burger or going over to Panera Bread or going over to wherever their favorite eatery is. And they don't understand that when you add that all up, you're talking anywhere from $100 to $200 a week. So we're looking at anywhere from $500 to $1,000 just in food that have nothing whatsoever to do with the business. Okay. Now it's different if you truly have a business where, maybe every Friday you have pizza for your team. That's a legit kind of a thing, right? If you're doing something for the team, but also if you have to meet with clients and take them to lunch, that's different. But most of the people that I'm helping and talking to, that's not the case. That's not what you're doing. And you think that if you wink, this, that, you're going to get that credit. And technically you're not supposed to. And most people find out when they go to do their taxes that depending upon their person who's doing their taxes, if they're doing it accordingly, a lot of that is not write-offs. So then people go, I don't understand. Well, guess what? When you just spent that $21 at Panera Bread, you're being taxed on it because it came out of the profits you made in the business. And that throws a lot of people off, especially when they're pulling money in and out. So part of knowing your business numbers is where are you spending the money? So it starts by knowing what's coming in. Most people don't. They're taking guesses. Then where money's going out. Where I find that they're the best at is when it comes to their materials, right? Because those are the big chunks of money that they've got to do, right? And they're usually writing out bids or doing estimates. And so they got a pretty decent idea of what's going on with the cost of goods. But when it comes to the rest of the expenses from the business, unless they've got some big chunks like, hey, my rent is $3,000 every single month, or my electric bill runs $500 a month or whatever. Unless there's something big in there, most of the time, people do not have the first clue as to how much money they're spending in their business on a monthly basis. And they don't understand why, I didn't spend $3,000. Yeah, you did. Here's the breakdown of all of those little things. It all gets nickeled and dime and comes out of the profits of the business. Plus, on your profit and loss, some of those things get added back in when you get ready to go do your taxes because, like I said, they're not deductible based off of your business. So for some people, they'll put on their stuff for their car, but they happen to have a business that the car is done by mileage when they do their taxes and not by actual expenses. So if you're someone like myself, because of how much driving I do for my real estate side, my car is done from that angle, but it's done through the mileage deduction because I get way more money than if I take it from my actual expenses. So I might have $500 or $1,000 on my P&L for car things, but I don't get to use them when it comes to actual expenses and deducting my taxes because it's done through a different method through the mileage deduction. Everybody's situation is different. That's why it gets confusing, and that's why we don't have a one-size-fit-all. But you need to understand, because honestly, if you're spending tons of money on your vehicles because of your business and they're all legit, you definitely want to figure out what's the best way for you to use it. Now, for some of you, you have vehicles that are only used in the business. For example, if you have, 2 or 3 trucks that are dedicated to the business full time, yeah, you're probably going to be able to write off all those different things. But if you've got a vehicle that is part personal and part business, it's going to be looked at a completely different way. And I'm not here to do tax stuff with you, but what I'm here to do is to try to help you understand. It all comes down to knowing those numbers, knowing where that money is going, knowing where that money is flowing, and where do I start? A lot of times people ask me, where do I start? And the place I always tell everybody is you got to start with your P&L. Okay. If you could do anything in your business to help you run a smarter business where you make more money, is it starts with knowing and understanding that profit and loss. And for some of you, it's creating it in the first place. You can manually do one on a piece of paper. If you're really micro small, you only do a few transactions a month, that works out well for you. But as you start doing more and more, I am always going to encourage you to move to something like QuickBooks or any of the other ones if you want, because it's a muscle that you're going to start building, right? If you think it's going to stay small time, then sure, stick with pen and paper, spreadsheet, whatever you want to do. But if your goal is to grow this business, then it is worth investing in something that is going to give you not only good tracking of where your money's going, where you can pull it up by vendor, by category, but also you get a really good profit and loss statement that you can really compare and use. So you can look at how you did for the month. You can compare it to how you did the year before. You can use it to set projections for the year ahead. Just the reporting alone is worth doing. When I had one of my brick and mortar, I did it both ways. I had a spreadsheet that I used to do a lot of different comparisons and different things, but I also had QuickBooks at the time. It was QuickBooks Desktop. So I could do a deep dive into anything specific. And a lot of people don't even realize on QuickBooks Online, if you see a number and you want to know what's in that number, just click it. It opens it up and tells you everything that's on there. There's no running reports. You just click the button going, well, I didn't spend $3,000. You click the $3,000 and boom, here it comes. It's going to show you if it was one thing, a bunch of little things. It's going to show you every little bit of money that was spent in that category. The key is you got to do it right? You can't just put them in the wrong things, because that's a whole nother problem I run into when I'm helping people clean up stuff. Is I'll run into a vendor that's put under 3 different categories, and I know that vendor is not couldn't be 3 different things. Amazon, yeah, It could be your office supplies. It could be regular supplies. It could be custom materials. Amazon could be a lot of different things, but usually a lot of other things are not multiple things. Gas stations could be both things, right? You've got gas and you've got food and snacks that you buy when you go in the gas station. And by the way, don't try to say that a $5 item was gas. We both know you went inside and got you a big gulp and maybe one of those little taquito things, right? And then the other one on the same day for the $50, yeah, that was the gas part. So, but once again, where's the money going? Because I'll bet you if you put all that in gas, for example, you're thinking, oh my God, I spent $500 on gas. No, you spent $350 in gas and you spent $150 on the big gulps and the little spicy chicken roll thing that you also picked up and chips, right? So once again, you got to know those numbers. You got to know where the money's actually going versus where you think it's going. Because like I said, so many of you guys are taking guesses. And I've been guilty. I can still be guilty of it today. I have 4 different businesses, and one I can be a lot more specific off the top of my head. And the other one, I'm usually taking guesses. I'm pretty much within the ballpark because I look at my numbers on regular basis. Right? So you don't have to be perfect at it, but you want to be in the ballpark. And I've had people that are so not in the ballpark. I'll ask them, hey, what did you do in October? And they'll spit out some number. And then I'll actually go into their system and I'll pull it up and I'm like, you are so off. If you want to give me back 20 grand, I'll take it because you're so far off, it doesn't even match. And that happens on a regular basis, believe it or not, where people are, we don't want to look stupid to other people. So I get it. We take a guess, but it doesn't matter what you tell me because I'm not the one running your business. Because if you're giving yourself false information, that's a bigger crime because now you're making business decisions off of completely bad data, right? You're making decisions based off of your gut and what you think. And if you are completely wrong, you're going to way overspend every single time. You're going to spend money on stuff that doesn't have a return. People will talk themselves into buying some $1,000 gadget that they just got to have. And they think in their head that all I got to do is sell $1,000 and it pays for itself. No, it doesn't. Because if your profitability is only 20%, you still have to pay those cost of goods and those other operational expenses. And for every dollar you make, you're only keeping 20 cents. So that $1,000 item really is, you need $5,000 because if you only have 20%, that's 1/5 of it. I know I'm being technical math here, but just trust me, you have to do 5 times the amount in sales just to break even on that item. So yeah, once you get to $5,000 using that item, it now pays for itself. But for some of you, you buy something that you might use once or twice a year, and it takes you years to get that puppy paid back. And in some cases, you guys break it before it ever does pay for itself, and that's just a whole nother issue to talk about someday. But once again, I really want you to think about the fact that I need to understand my business numbers better. And it all starts with that P&L. What are my sales? What are my cost of goods? What are my operational expenses? Where am I spending that money? Then what is my net income? How much money do I have for potential profit? Then remember, 3 jobs, right? It's got to go to your taxes, retained earnings, money to put back in the business to buy more materials, to pay the employees, to grow things, to buy tools and whatnot. And then there's money that you get to take as an owner. And that's the money that you get to pull out. That thing just gets chop, 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 chop. Because even that 20%, at the end of the day, what actually goes into your pocket might only be half of that or 1/3 of that, depending upon how much you need for other things. Debt is another thing. You hear me talk about this all the time. People are like, I don't have any money. I don't have any money. You don't because you have debt. Because you went out and ran these credit cards up to $10,000, $20,000, $25,000. And now you are having this big payment where you have to pay $500 to $1,000. And that comes out of that profit. Not to mention the fact that you have the interest that's also put back in there. I have businesses that have $500 a month just in interest alone. And yes, the interest part you get to write off, but you already wrote off when you bought what it is. You don't get to write off the payments that you're making on these loans, on these credit cards, because you made the initial purchase and you put that down as an expense when you bought it. So when you carry that debt for a year, 2 years, or whatever, you are just paying money out of your profits. That's all you're doing because you already took the deduction back when you originally bought it. That's why it's so important that if you're going to put something on a credit card because you want the points, pay off that credit card every single month like clockwork. The business owners that do that, the ones that don't carry that debt from month to month to month, actually have more money that they make. They make statistically, and from what I've seen, it backs it up. They actually make more money. They're actually more profitable because they're not in this sea of debt constantly trying to crawl out of it. I've got business owners that have debt coming at them from all angles. They've got credit card debt. They've got, loans on their vehicles and stuff like that. They've got vendor debt where they're running a credit line at their vendors that they still owe, right? Because they floated them the money and they still owe them that money. They've got employees and they've screwed up their taxes some way, somehow, and they owe the government all kinds of money when it comes to that. Don't get in trouble with the government, people. They will get their money one way or another, all right? But there's all kinds of ways where people are owing all of this money to everybody else, and then they wonder, how on earth did I make $20,000 because I didn't see $20,000? No, you didn't. It's all on the debt. It's all going out for all these other things. And they feel like they can't catch air because guess who's not getting paid in all of this? When you owe money to all these different people, your money goes to all of those other people. So the person not making money is you, right? So yeah, the government comes along, says they want their $7,000. I don't have $7,000. Where am I going to get $7,000? It's because you spent it. Right? You bought the food, you bought all the stuff, you got way in debt, you did all these different things. This is why it's so important for you to understand your business numbers. You've got to understand from day one what's going on with the money. When you get time to your taxes, it should not be a surprise to you that you owe money. Because if you're paying attention to your numbers and you're realizing, I've made $10,000. I probably should put $2,000 away for my taxes. Or, hey, I should go to the IRS website and apply it to my taxes now so I don't spend it. Whatever the case may be, you can see it happening in real time. This isn't a gotcha surprise when you go to do your taxes. You had all the information you needed to know it was coming, but you chose not to look. You chose to be an ostrich. You chose to keep your head in the sand and not pay attention. That you just said, if I don't look at it, there's no debt there. If I don't look at it, it's not growing. If I don't look at it, I don't have any taxes to pay. If I don't look at it, things will get better magically because this is no. You know what? I'm a professional procrastinator. No one understands this concept. If I leave it alone and don't look at it, it will go away. I live and thrive off of that. But I also am realistic. I know when I'm choosing not to do something, it's going to come back and bite me in the butt. I know that if I don't do it, I can't be shocked at the consequences for me not doing it. And all I'm asking you is at least acknowledge the consequences, but more importantly, take the steps. Learn your business numbers. Start to understand those business numbers. Just start with the P&L. Start with sales minus cost of goods minus expenses equals profits. Start with the calculation. Use it on your pricing. Use it on how you run your business. Then go tie it into the profit and loss statement. I promise you, the more you start to learn your business numbers, the more hungry you're going to be to learn more. Don't try to understand everything under the sun. Just start with the profit and loss. Matter of fact, when people do my course and they ask me for some advice, I tell them, you can ignore all the other modules. Just start with the profit and loss. Get to learn and understand the profit and loss statement. Learn how it can do different things. When I'm helping people with their bookkeeping, every month I give them the reports that I think are going to help them. Just if I can tell who looks at them because they use the information to do something. And then there's some folks that say, great, they look at it and they move on and they're not using the information. That's cool. That's them. That's whatever any of us want to do, right? I can't force any of you to do anything. But what you can do if you truly want to make a difference and you truly want to make more money and you truly want to know where your money is going, it all starts with understanding the basics of your business. It's understanding the flow of money through your business. Sales minus cost of goods minus expenses equals profits. Wow, I'm looking at my P&L. It's income, or otherwise known as sales, minus my cost of goods, minus my operational expenses. That comes up with my net income, which is the profit part. And then what is my profit doing after that? I've got to have it take care of the the taxes. I have to have it to retain, to grow the business. I have to have it to pay off these loans. And then I get to take home money. That's the way it works. You got to understand that basic concept. You got to use those numbers to see what's going on. When you're, like I said earlier, if you want to know how you're going to do, we're about to go into a new month. If you want to know statistically what you're going to do, go look at what happened last year. What was the trend? We're having, the country's kind of got some weird stuff. On the West Coast, it's a little bit rainy, but like here in Arizona, we're warmer than we normally are this time of year. So businesses are doing much better right now because it's been warmer. It's not as cold, what I call Arizona cold, because I know you guys back east gets real cold, right? But at the same time, as if you're in another part of the country, you're having a lot of rain, a lot of cold, it's going to impact you a little differently, right? Because it's worse than normal. But if you use history, it's going to tell you what's that going to do with your sales. So if I'm looking here in Arizona at my sales compared to last year, I should be doing better than I was last year because the weather is so much nicer this year than it was last year. If I'm in other parts of the country, it might be, oh, wow, we're having the worst weather we've had in a while. More than likely, my sales are going to be less. Or it could have an impact on your cost of goods at the same time. It could have an impact on your expenses. Everything's different. So you want to make sure that you're looking at all of that information. Once again, if you know your business numbers, you can make these decisions in your business off of facts and history because you have them at your fingertips and you're able to use it and you know how to interpret it. You're not going to be a pro in the beginning. Okay. You're not going to be an expert in the beginning. You're going to learn it as you go. You're going to learn it because you're going to ask questions. You're going to try to understand it better. You're going to do some research. You're going to make some phone calls. You're going to ask other business owners. You're going to just dive in and say, what if I did this? What happens here? You're going to go watch YouTube videos. That's why you're here right now. For some of you who are watching it on YouTube, you're going to go dive into someone's catalog of videos. Like if you wanted to become, basics for dummies when it comes to a P&L, there's videos out there for that, whether it's mine or somebody else's. Reminds me, I really need to make a new updated one. It hasn't changed, but I can teach it differently now than I did a few years ago, for example. But just learn. Whatever you do. Learn your business numbers, understand your business numbers, understand that taking guesses doesn't really help you, okay? It gets you into the ball field, but it doesn't help you hit a home run, right? You got to know the information. You need information to be successful. That's all I'm asking you. I have been rattling for a long time. Why? Because it's that important, and I really want to set the tone for this coming year for you. I want there to be a change for you. I want you to understand that your business will change and grow. Your business will become more profitable when you start paying attention and understanding these business numbers. If you keep doing what you've been doing, you're going to keep getting what you're getting. That's the way it works. And in some cases, you get worse because you're not seeing the train coming. Right? People who don't look at their business numbers don't see a train coming. And I'm going to give you a great example of that. There are businesses out there that have a pretty high payroll, right? And I was looking at a business owner and his sales for the most part were flat, but he's like, man, I'm broke. I'm making less money than I've ever made and this and that. And I look at his P&L and it's blaring, screaming to him that his sales are flat, but his payroll continues to creep up. You cannot run a profitable business if your sales flatten out and your payroll's going up. Payroll is the single largest item on most people's P&L. And when you're not cutting your payroll and your sales are going down or your sales are staying even and your payroll's going up, it is a disaster coming. Okay. Or your sales might be staying the same, but your cost of goods have been going up and that's eating into your profits. Or something else may have changed behind the scenes that you're not catching because you're never looking at your P&L. The information will tell you when that train is coming. The information will tell you how to get out of it because of other things that have happened in your past. If for example, if you're brick and mortar and your road was ever shut down, it hurt your business big time. So if something new happens that impacts people being able to get to your business, maybe it's not a road closure, but you can use the information from last time to help you out this time, right? Maybe you ran a special that was a bomb and you can go see how that happens. Maybe you ran a special and it was great. How did that impact it? Maybe the weather did something and that the history, once again, history will tell you so much information. But once again, you got to know your business number. It's in there. You can tell how passionate I am because I just keep talking about this. And I'm really going to try to help this coming year continue what we've been doing here, which is talking about your business numbers, the importance of your business numbers. And if it sounds repetitive, good. It needs to be. Most people are not born specialists to numbers in general. You don't just pick up something and all of a sudden you're an expert at it. That's not the way it works. You do it over and over and over. Repetitive information, right? The more you know, the better you get at it. You have to do it multiple times. Then all of a sudden you become better and better at it, and pretty soon you become a pro. We're going to do that. You're going to get sick of me saying some of these things over and over this coming year, but I promise you, you will end the year way more knowledgeable than you started the year. And that's what my goal is with you. And I need that to be one of your goals, that if you're listening, whether it's the first time you're listening or the last time, or you're like, Tammy, I'm out of here, right? Or you kind of come and go. Business numbers are what are going to make you profitable, okay? You got to know the numbers so you can make the right decisions in your business. I'm going to start rattling. Just, hey, let's do this together, okay? Let's help you make more money in this coming year. And if you're listening to this in the middle of the year, let's help you start making more money moving forward. It doesn't matter when you start. The important thing is that you start. And I really, really, really want you to be profitable. I want you to grow your business, but I want you to be profitable. I want you to make more money than you've ever made before in your business. And that is what our goal is. All right, with that, I'm out of here and I'll talk to you next time. Bye for now.